HIMS and Hers Health, the retail darling, was down 34% today after some brutal news disclosed by one of its partners. The stock now trades at $41. At the start of trading today, the stock was above the $60 mark, and we're going to talk about why. Why is HIMS and Hers Health down, and is it a buy right now? But before we do that, if you could please go ahead, like and subscribe. It really helps me out. So if you've been living under a rock, you haven't heard about HIMS and Hers Health, they're just a telehealth platform operator that connects consumers to licensed healthcare professionals in the United States, United Kingdom, and internationally. And they pretty much just provide prescription medicine on a recurring basis for stuff like general wellness, sexual health, skincare, hair care, weight loss, etc. Now, they are outside of healthcare insurance, so they're able to really adapt really quickly, but you will be out of pocket if you use their platform. That being said, due to their price point, their speed, efficiency, and customer service, HIMS has become very popular. So why is the stock down 34% today? Well, it has to do with the news from Novo Nordisk. Novo Nordisk was partnered with HIMS and Hers Health. They have terminated their partnership with concerns to mass compounding and deceptive marketing. Now, in the middle of April, late April, somewhere around there, Novo Nordisk and HIMS partnered up, essentially so HIMS and Hers Health could sell semaglutide. Novo Nordisk owns the patent to Wegovy, a popular obesity drug that contains the GLP-1 agonist semaglutide. Now, HIMS and Hers Health were able to actually sell the compounded drug because it was on a shortage. In late February, the FDA removed semaglutide from its drug shortage list. In other words, HIMS and Hers Health could no more compound the drug and sell the drug. And to get over this, they just partnered with Novo Nordisk. However, that partnership was very short and not fruitful at all. We'll go ahead and read this entire paragraph. In late April, the FDA resolved the Wegovy shortage based on its conclusion that Novo Nordisk is fully meeting current and projected nationwide demand for this medicine. In support of transitioning patients from knockoff compounded versions to authentic, FDA-approved Wegovy through NovoCare Pharmacy, Novo Nordisk began collaborating with telehealth companies. Over 1 month into the collaboration, HIMS and Hers Health has failed to adhere to the law which prohibits mass sales of compounded drugs under the false guise of personalization and are disseminating deceptive marketing that put patient safety at risk. Long story short, so even though HIMS and Hers Health were partnered with Novo to provide Wegovy, their approved drug, HIMS and Hers Health, it looks like, was still actually offering their generic compounded drug, which apparently has safety risks. If we continue reading, Novo Nordisk is deeply concerned and is continuing to take corrective measures to keep US patients safe from knockoff drugs made with foreign illicit active pharmaceutical ingredients. Based on Novo Nordisk investigation, the semaglutide active pharmaceutical ingredient that are in knockoff drugs sold by telehealth entities and compounding pharmacies are manufactured by foreign suppliers in China. The FDA has never authorized or approved the manufacturing process used by any of these foreign suppliers to make semaglutide, nor has the FDA ever reviewed or authorized the quality of the semaglutide they produce. The report also found that a large share of these Chinese suppliers were never inspected by the FDA, and many of those that were inspected had drug quality assurance violations. US patients should not be exposed to knockoff drugs made with unsafe and illicit foreign ingredients. So because of this, despite their partnership, HIMS and Hers Health was still offering their compounded version of their semaglutide, I think for better margins, Novo Nordisk ended their partnership. HIMS and Hers Health CEO came out and actually put out a statement. He said, "We are disappointed to see Novo Nordisk management misleading the public. In recent weeks, Novo's commercial team increasingly pressured us to control clinical standards and steer patients to Wegovy regardless of whether it was clinically best for the patient. We refuse to be strong-armed by any pharmaceutical company's anti-competitive demands that infringe on the independent decision-making of providers and limit patient choice." Now, anti-competitive, that's a very key word right there. "We take our role of protecting the ability of providers and patients to control individual treatment decisions extremely seriously and will not compromise the integrity of our platform to appease a third party or preserve a collaboration. The health and wellness of individuals always comes first. We will continue to offer access to a range of treatments, including Wegovy, to ensure providers can serve the individual needs of patients." So you can see now with this dynamic, this back and forth, why the stock was down. Pretty much this was a pretty big deal. Part of the reason why the stock in HIMS and Hers Health actually had such a strong run up this year was due to this partnership and their ability to keep selling GLP-1s. But the madness does not end there. HIMS and Hers former VP of Pharmacy came out and made a statement as well. He said Novo Nordisk's press release this morning says it is deeply concerned about knockoff drugs made with foreign illicit APIs and is taking action to protect US patients. But according to an expert call with a former HIMS VP of Pharmacy, the API in HIMS GLP-1 comes from the same place that Novo Nordisk uses. There are no doubt hundreds of shady operations selling illegal sham GLP-1s with questionable Chinese APIs, but HIMS is not one of them. Based on this, former VP, HIMS and Novo source their ingredients from the exact same supplier. We'll try and verify more details on HIMS production process in the coming days. Now, apparently, HIMS and Novo use the same Chinese suppliers, so the validity of this is up in question because when you go to Novo Nordisk and some of their earnings calls, they only get their APIs and their ingredients from 2 sites in the US and 3 sites in Denmark. That's it. They apparently have no Asian suppliers. They have none of that. They just get supplies from Europe and the US. That's pretty much it. So whatever this is, these claims or these alleged claims may not be completely false, but if this is the case, someone is lying. Either HIMS is lying or Novo is lying. I'm not going to say who is who. That's up to the regulators and the prosecutors to determine. But this is really, really ugly. This is really, really ugly stuff for HIMS. And as a result, Needham Securities downgraded HIMS to hold, removed their $65 price target, and removed HIMS from their conviction list. Citi came out and reiterated HIMS as a sell, and the $30 price target says legal risks has increased substantially. The short sellers were out in full force. You can see shorts were being added to the name. In large part, there were 4.1 million short shares available. At the end of the day, there was only 2.4 million. So, institutions were adding shorts in a very, very big way on the back of this news. And about 30% of HIMS's float is actually short. That could squeeze to the upside, but just something to note right there. So very bearish price action. The bears certainly won today, but let's actually talk about the fundamentals of the company. Now, the reason why HIMS is up, 100% plus this year, or was after the fall, has to do with the fact that they're growing very, very fast. You can see here that their subscribers grew 38% from 2024 to 2025. This is the quarter ending in March. In that same time period, monthly online revenue per average subscriber grew 53% from $55 to $84. Absolutely insane. You can see that the company is increasing their margins as they go along. Free cash flow margins nearly doubled from 5.4 to 9.1%. Net income margins more than doubled from 4 to 8.4%. And you can see the company building very, very strong operating leverage. They have a great balance sheet. And if we actually just pull up the income statement, you can see that revenue grew 110%. Cost of revenue only grew 68%. Operating expenses only grew 41%, and as a result, you're going to have net income grow 344% on a year-over-year basis. That is what operating leverage looks like. And when we look at some of the credit card data here from HIMS, you could see that it has bottomed after the Liberation Day lows right here, and it's actually been on the up and up. And if we look at the last month, right, roughly in line with what we've seen so far this year, still well off the highs that we saw, I would say, coming into the year in February, in March. We have seen a bit of a decline in sales. However, we're still holding above the 1 million total sales per day. And to be honest, if you average this out for the quarter, it does look like HIMS might actually go ahead and meet their quarterly targets. So where does this leave the company with its valuation? Now, the stock is not particularly cheap, but I wouldn't say it's expensive as well, given its growth prospects. I mean, right now, after the drop, the company trades at 28 times EV to EBITDA. This is next 12 months, 38 times PE ratio. But do understand, this is a company that just started turning profitable and is building operating leverage, and a shareholder yield of about 0.67%. Now, looking at a framework for valuation, when we plug in $1.7 billion, that's the trailing 12-month revenue right there, and assuming that grows to $5.4 billion in 2029, that's 25% compounded. That is slightly under consensus. And then we have free cash flow margins growing from about 13.9% to 19%. And again, this is below consensus. The consensus have free cash flow margins at about 21% in 2029. So, we're looking at about $1 billion in free cash flow in 2029. If we just apply a 22 times EV to free cash flow multiple, right, you get the enterprise value, subtract the net debt, divide by shares outstanding, which are growing 3% sequentially. You should get a share in 2029 of about $92. The current price is just under $42, and that represents a 17% compounded annual projected return over the next 5 years, which is very, very solid. You peg fair value at about $52 per share. So is HIMS a buy right now? I would say yes, that is a very, very healthy return. What you really want to look for right now is a bit of consolidation. You could see that we'd had a massive gap down. Sentiment is not too good. And what you really want to look for is probably some consolidation right here. Once you have that, we can then go ahead and target those highs, those 52-week highs and those all-time highs at $76 per share. You can see this is the 200-day moving average. If this continues to trend up and we sort of like consolidate right here, that would probably be the best case scenario for HIMS. This would be a great place to start accumulating shares. But I would say anywhere from like the $40 area into the mid $35 area, this is a great place to buy. You can see we also have a strong support zone right here and right here. So if we do get to this level and then we maybe see the 52-week and then we maybe see the 200-day moving average move up, you can then go ahead, look to buy this dip for a move to the upside and potentially retaking those all-time highs. But that all depends if these figures hold up. We really have to see what earnings revisions are going to look like in the future. But it does look like HIMS is looking very, very attractive right now. I do like the debt profile. I don't like that they're not buying back shares, but this is a company growing very, very quickly. And ultimately, this is a company that's going to keep adding products and medications to their line, and that's going to constantly increase the TAM. And they truly are disrupting pharma and the healthcare space. So is HIMS a buy right now? Yes, 100%. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button and leave a comment for the algorithm. Cheers.